Store.
Very good morning. Welcome to Chartbusters. The markets haven't moved much. The bright spot is that the Midcap index is trading in the green and the Nifty bank is doing a relative outperformance. Interesting times. Remember, yesterday we took support at around the 20 DMA and we bounced up a good 250 points. Will we revisit that level or are we set to trend higher? Well, we'll come to know in the next few days. Hey, Mangalam.
Hi, Nigel. Tomorrow is expiry as well. And the interesting part of today's trading session is we have 3 stocks advancing for 1 declining. So that should be good. And the fact that we're not doing much is something that would give some support to bulls, primarily because we did see some sell-off on Wall Street yesterday. And global markets are usually a little jittery over the last few trading sessions. First up, all the top stories that we're tracking this morning for you. The Adani Group indirectly acquires 29% stake in NTTV, launches an open offer for a further 26% stake at 294 rupees, which is a 20% discount. The stock locked in upper circuit.
Adani's interest in NDTV sends media stocks rallying. TV today surges close to 10%. Others too gain in trade.
Chennai Petro is the other stock, up almost 4% as the company has signed a joint venture with IOC and a number of seed investors for a 31,500 crore rupee refinery project in the Kaveri Basin. The company will also invest 2570 crore rupees into this project.
Arvind Smart Spaces signs an agreement with HDFC Capital Affordable Real Estate Fund for creation of a residential development platform which has a revenue potential of 5,000 crore rupees.
Goldman Sachs initiates coverage on Affle India, says the company may see revenue compounding 32% from rising internet and smartphone as well as e-commerce penetration till FY25. They have a target price of $14.95 on the share.
Well, keep an eye out on the broader markets. Quite a few stocks are moving pretty well. Ami Organics, the stock has spiked up to the high point of the day, so keep an eye out on that one. Repco Home Finance as well. I don't know what's going on there, but for this month itself, the stock, I think, has given massive returns. If not mistaken, I think it's 60-70% returns. So Repco Home Finance is just today, but just pull up, the month-to-date chart out there. That'll give you a better picture. Well, we have Shrikant Chavan as well that's joining in. Hi, Shrikant. How do you trade the index? What are the levels you're looking at? And fill us in with a couple of your picks.
Good morning, Nigel. Good morning, Mangalam.
Morning.
I think, the Nifty is very clearly into corrective mode, and after correcting to the important support levels of 17,350, yesterday we saw a sharp recovery from lower levels. Today also, after hitting the lows of 17,500, again we are seeing the recovery in the market, and above 17,625, which was yesterday's highest level, we can expect further more short covering. So we are of the view that in last 2 days we saw some massive shorting in the market, and today if we see the market is crossing the level of 17,625, then we can expect further more short covering. So certainly it's a buy at current level with a stop loss at 17,500 on the downside. On the high side, we can expect one rebound to the levels of 17,750.
All right, we take your point, Shrikant. Just hang in there. A couple of other mid-caps also surging as we speak. Kalyan Jewellers is one of them. This week itself, the stock is up almost, 17-18 odd percent. The other one is Canterbury Retail. That's gaining almost around 24% this month on that counter too. We've spoken to the management a couple of times here on Chartbusters itself. Shrikant, individual stocks, what do you have on your radar?
Yesterday, when the market recovered and the market started sustaining above the mark of 17,500, we saw activity in almost all the mid-cap and small-cap companies, and especially in those companies where the trend is very, very strong. So we are of the view that this particular rally is going to continue. I mean to say this rebound is going to continue, and maybe all these mid-cap stocks are going to do well. In that space, we like Hycel Chemical, which is currently trading around some 330, 332. It is very close to its upward breakout, but the next level to watch out for would be 355 or 360. So Hycel is a buy at current levels with a stop loss at 320 on the downside. And the other stock which we like is Apollo Hospital, which has fallen from the highs of 4,500 to the levels of 4,100. Currently it is at 4,150, but again the stock is forming higher top, higher bottom series. So it's a buy at current level with a target of 4,400. We can keep stop loss at 4,080.
All right, Shrikant, thanks so much for stopping by and filling us in with your call on the index as well as on a couple of those stocks as well. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Powell joins us to fill us in on a stock he's tracking closely. Sachin?
Apex Frozen Foods, the company delivered a very impressive set of numbers in the June quarter after a very long time. Revenues in Q1 were up almost 39% year-on-year, driven by a healthy combination of both value as well as volumes. On the volumes front, strong growth across the key markets, which is the Europe markets as well as the US markets, drove the shrimp volume to almost 15% year-on-year. On the value front as well, global uptick in the shrimp prices, as well as a favorable product mix and favorable currency movements, boosted the realization by almost 20% year-on-year. The margins for the company came at around 11%, which was again benefited by the easing of the supply chain bottlenecks, as well as some correction in the global freight rates. Well, the outlook for FY23 appears fairly stable as the demand trends continue to exhibit stability in terms of consumer spending. Moreover, the supply chain bottlenecks have started to ease, which again bodes well in terms of margins for Apex's profile. Well, the company currently trades around 13 to 14 times FY23 estimated earnings, which appears fairly reasonable from a long-term perspective.
All right, with that, we'll step into a short break. On the other side, we'll get chatting with the management of Kirloskar Ferris. Stay tuned. Let's get chatting with the management of Kirloskar Ferris. R.V. Gumaste, who's the managing director of the company, now joins us to discuss the company's outlook for this year and, more importantly, the prices that we've seen in the pig iron. Mr. Gumaste, always a pleasure speaking with you. First up, if you could tell us what the average pig iron prices in the second quarter, the quarter that we're currently in, were, and how do they compare with the first quarter? And secondly, in the castings business, you were bracing for a downwards revision sometime in October, right? What is the quantum of that?
First of all, the pig iron prices in quarter one were in the range of about 58,000 rupees per metric ton ex-works. And it has taken a downward correction with the commodity prices going down. And we expect quarter two prices could be around 50,000 rupees per metric ton. With respect to casting prices, with this quarter, the commodity prices having come down, we will have to downward correction, and it could be up the order of 4-5 rupees per kg of casting.
Okay, all right. Hi, Mr. Gumaste. Always good speaking to you, sir. 4-5 rupees lower, sir, would be what? You're at around 125 rupees per kg. So that you're expecting it to come closer to around 120. My problem is there could be a possibility there'll be a downside risk. Do you think it will be larger than 5-6 rupees?
No, I think it is a part of the negotiation. I believe 4-5 rupees is the appropriate, and it could be slightly less, not more.
Okay.
You sure about that? And what is the kind of... because clients would always want to pay lesser, right?
Yeah, I know. It happens, but I think one has to see because the commodities have started going up. The coal prices have moved up about $75 to $80 per ton in the last 1 week. So it's not that everything is just going down. No, there are corrections as well upward.
Okay, all right. Let's focus on volumes then for both the segments. Last year in the pig iron business, I think you did close to around 5 lakh tons odd. And in the casting business, you did around 114,000. For this year, what should the numbers look like, keeping in mind that you have an additional capacity coming on in Sholapur in the second half of this year? So that will contribute a wee bit. Give us both those two numbers.
With respect to pig iron volumes, you know that blast furnace 2 was taken up for upgradation.
Yes.
We have completed in the last 4 months, and it is up running from the first week of July. So that is already in. But we are likely to take one more shutdown on blast furnace 1 to introduce pulverized coal injection into blast furnace 1 and 2. And if that happens, overall, I can expect, though the productivity in the furnaces is going up, but because of the shutdowns factoring in, we expect that overall volumes could be around 5 lakh ton this year as well, in line with the last year.
Okay.
With respect to casting, capacity utilization in foundry 1, 2, 3, all are going up. and demand for casting across the sectors is good for Kirloskar Ferrous Industries, and we are increasing our production and sales. We have already it could be in the range of 1,40,000, and we are already in the run rate of about 12,000 metric ton of casting sales per month.
Right, take that point. Mr. Kumaste, here's a two-part question with regards to your operational performance going forward. One, prices are going to be revised downwards. So to that extent, what happens to the margins? Are we expecting some sort of recovery in the second half at some point or not? Because first quarter, your margins were close to what? 12.4% on a consolidated basis, 14.6% on a standalone basis. That's point number one. The second one, you had captive iron ore mines, right? You were supposed to make them functional. Have they become functional? You were going to save about 100 crores there too.
Let me address the first question first. With respect to casting price revision, it is the revision because of the raw material prices coming down. I don't think it will affect or bring down our realization. I think we'll be able to protect our realization. With respect to pig iron pricing, as the coal prices have come down, but we had stocks of the coal at high price in quarter 1. We are affected partly in quarter 2 as well. Going forward into quarter 3, quarter 4, we will start getting the coal at lower prices, and pig iron prices holding around 50,000. We should improve on our sales realization on pig iron. We should improve the margin in pig iron. And coming to the iron ore mines, we have gone through with the forest clearance from the center. The state government, there are certain clearances, and unfortunately, we have not been able to start the operation till date. But we are quite optimistic. A couple of months, we should be able to start operating both the mines, and we should still recover the entire annual volume to be done in the second half, and we should be able to mine about 350,000 tons, including what we have mined and kept about 1 lakh ton. So that should give us a substantial benefit. I'm still hopeful, these mines starting because of the number of clearances we get stuck. I'm quite optimistic, hopeful it will start in second half.
Okay, all right, Mr. Kumaste, you have not been only hopeful this quarter. You have been hopeful last many quarters, but we go with your optimism, and you're looking at around 3.5 lakh tons coming in from these captive mines. So we'll wait by on that. Let's shift focus to ISMT. That is the new acquisition that came in there, and that's ramping up pretty well. You managed to turn it around a little bit in the first quarter, but the street will be looking at what's the focus from here on. So a couple of questions out here. What is the current utilization levels at ISMT? If you could tell us, when do you get to say 3 lakh tons for both your segments out there on an annual basis? And if you're getting to that mark, then will you have to spend some more money, any more capex? Go ahead.
I think it's very, very important that, over the period, ISMT was under losses, and many challenges they faced on the financial front, because of which the upkeep of the plant, equipment, machinery, there were challenges, and we are focusing on that to bring stability of output, production and sales. Last year steel production and sales was in the range of 230,000 ton. And couple of years, this year and next year, we expect it to take it to say 250,000 and then to maybe 275,000, and we should reach within 2 years 3 lakh ton. We have to do some work, and we are on the job. With respect to tube, the major capacity is available in Baramati, which is, we have a possibility to increase the output. The first level at which we are looking for is how to take it to around 150,000 tons of tube production from Baramati and another 50,000 from Nagar. Couple of years, I think we should be able to stabilize, and at the same time, I think it's not only the volume, but margin is also important.
Yes.
And hence we are focused on what we can do and where we should do with respect to reducing the manufacturing cost and reduce the cost. And also very important is the the key elements, whether it's power and fuel, manpower, and bringing the growth back, which should mitigate the employee-related expenses.
Mr. Gumasti, a couple of questions. Tubes, you are currently at around 2 lakh tons, I think. So that's what you're indicating in terms of capacity utilization levels. You want to go to around 3 lakh tons. So, by when? That's in which year? In the next 2 years, you expect to 3 lakh tons. And if you go to these levels, do you have to incur some more capex? So that's point number one. And the second factor is you mentioned about the PAR. PAR has always been a big struggle at this ISMTA. You're looking at selling one of the units out there. I believe that it's quite outdated and obsolete as well. How much money will you get from there? And if you could give us a quick update.
No, I think I don't have any figures to give how much money we can really recover. But we are looking for someone who can take it and make use of the power plant as well as the land over there. And we have a couple of interests coming, and I'll be able to subsequently let you know once we have a figure out on the amount.
And how big is the land?
We are looking for hiving it off because we can't make use of that.
Okay, and if you could tell us in the first part, how much capex you need to incur to take your capacity to this 3 lakh tons? Do you need to incur, or with the current capex itself, you can go to 3 lakh tons on both tubes as well as steel?
No, I think there are debottlenecking investments required, maybe about 40-50 crores per annum or each year. And major investment will come in the area of bringing the solar power to the unit. And that would be the major capex.
All right. And
we will have to take a call and then start the project.
Quickly before we let you go, the power plant, how big is that land? And secondly, you said you're doing 40-50 crore capex, which you need to do for debottlenecking. What's the debt on your books? Will you have to take some more debt? Where does it peak out?
The land there is about 150 acres.
Okay.
And the debt on KFL's book as on date is about 800 crores. And we are not really looking for any major borrowing. I think over the period, debt should taper down and not increase.
Okay, all right. And the consolidated debt you said is how much?
800 crores in KFL.
Okay, even including the ISMT acquisition, all inclusive, right? 800 crores.
ISMT doesn't have any loans on the books, and it is only loan of around 200 crores of KFIL.
KFIL itself. Okay, all right. Good speaking to you, Mr. Gumasti. Thanks so much for stopping by and giving us all those details. Consolidated debt, we got that at around 800 crores.
Thank you very much. Good day, and it was a pleasure talking.
Slip into a short break, come back, and we'll continue our focus on the markets. Welcome back. Well, crude prices have rallied overnight to around $100 mark. Sonal joins us to tell us more on that. Sonal?
Thanks a lot for that. Well, it's not only crude oil prices, even gas prices, they have been surging, and they surged even more overnight. Well, Saudi Arabia has hinted at a possible output cut, which definitely would mean lower supply, and that is the reason why we saw crude rallying around 2.5% or 4% in overnight session, and it is above that $100 a barrel mark. And it is not only crude oil prices, as I mentioned, even European gas prices, they surged 13% in overnight session, and it is at a record high levels as we speak. After the Gazprom announced that one of their pipelines will go under maintenance for 3 days on 31st of August, we did see a sharp spike in gas prices. Additionally, we got to know that there is a damage to a key pipeline into Europe, so that would mean more supply pressures as far as gas is concerned. Spot LNG prices, they are at record high levels at $57 per MMBTU. So very bullish cues coming in as far as the energy markets are concerned.
Okay, all right. So thanks a lot for that, Sonal. Well, by the way, just, Mangalam, Orient Paper, the stock has spiked up. That's been one of the biggest underperformers this year from the paper pack. If I'm not mistaken, that's the only paper stock. Most of these stocks are up 50, 60, 70, 80% or more than 100% as well. But Orient Paper is one of the only companies that hasn't really moved. Today, it's up close to around 6.1%. I believe, I was going through the annual report. They have a boiler, and that's likely to be commissioned, either in the second half of the year or maybe in the month of September itself. So there'll be some cost savings on that front. And if that happens, then in fact, maybe the street is saying that the worst could be behind it, just maybe. Pull up, I think a year-to-date chart is what we're looking forward to, and maybe you compare it with another paper name. So just thought we'll highlight that.
All right, so that's about Orient Paper. With that, what we do is take a short break. On the other side, Trading Hour comes up next. That's all the time that we have for you on Chartbusters.